Welcome, everybody, to CRE Power Hour. Today, our guest is Mitch Ginsberg, and we are so excited to have him on our show. We have a live audience joining us today, so we welcome you to ask questions throughout the hour, and please drop your name and where you're from in the chat. We'd love to hear from you. My name is Lisa Marie Wand, and my co-host Stephanie is not here yet. She's actually just getting off of an airplane, and so we'll be missing her, but we'll move forward. And Stephanie and I, we've spent the last 2 decades growing and scaling our business, and together we're bringing a new space for you to learn alongside the best in real estate with the CRE Power Hour. Let's get right to it. Hey, Mitch, thanks so much for being on the show today.
Well, thank you. Thanks for having me. I'm excited to be here, and sounds like it'll be a lot of fun.
Yeah, welcome. I'm going to introduce you. You have quite an amazing bio, so I'm going to hit the highlights here, and so don't blush because
I'll do my best.
Right?
I'll do my best not to.
So Mitch, after being exposed to the painful process of obtaining a commercial mortgage, Mitch was determined to create a platform that empowered the borrower and changed the way commercial financing was secured. That's a pretty great statement right there. And let's see what else we have here. At the time, giving the borrower access to capital markets while providing a superior lending experience was a problem that needed to be solved. So you're a problem solver. So tell us about that.
Absolutely. So, I was exposed to commercial lending. My background originally was in residential lending for 25 years. So I think I started when I was about 3. So that's my story, and I'm absolutely so. And residential lending is very homogeneous. You got single family homes. You maybe got 1 through 4 units. The loan types, you've maybe got a 30-year fixed, 50-year and 15-year fixed, and maybe a few intermediate adjustables. And so essentially the market is dominated. You got Fannie Mae and Freddie Mac are the huge secondary markets, and then maybe a little bit of FHA and VA and that. But so there's really not a lot of differences in product, and certainly not a lot of differences in property type. So it lent itself to a lot of technology, a lot of automation. Fannie Mae and Freddie Mac had automated underwriting engines, DU and LP, back 20 plus years ago. So, you'd get instant approvals, and just the loan processing systems that were available and have evolved. It's so very high tech, very efficient. And I guess commercial lending is the absolute antithesis of that. It hadn't changed in literally 100 years. Exactly. 100 years. Pretty much the same, the same thing, except you drive up in a car instead of, horse and buggy type of thing. But it's so the process itself has been stagnant. And for if you look at commercial real estate, it's so different to residential. You got so many different kinds of properties. The 4 main food groups, which is retail, industrial, office, multifamily, but then you got hotel, hospitality, and not all hotels are created equal. You got full service, limited service, flagged, unflagged.
It goes on and
on. Absolutely. And then you got self-storage, and you got other single purpose like gas stations, etc. So a huge myriad of different property types. And then you got so many different kinds of lenders. You got banks, but not all banks are created equal. You got federally chartered banks, state chartered banks, et cetera, and then credit unions, and then you've got Fannie and Freddie on the multifamily. You've got life insurance companies. You've got debt funds, private monies, CMBS. So you got all these different kinds of lenders. You got all different loan programs ranging from 30-year fixed on HUD loans to interest only. So needless to say, the borrower really hasn't been well served in the current environment. How do you know where to go? You go to your traditional.
That's a really good point, Mitch, because as a commercial real estate broker, sometimes I am perplexed as to what would be the best option for my client as far as how to structure their loan, taking into consideration exit strategy and everything else if there's a 1031 exchange. So I will tell you, as a successful commercial real estate broker, sometimes the choice of who they go to is who calls us back, because a lot of times these different types of banks, credit unions and things don't call back. So I feel like you're really have identified one of the many antiquated processes within commercial real estate.
Absolutely. You know, so the borrower really, as you said, you'll go with whoever calls you back. Is that the best option for the lender?
Sad.
Obviously not. Yeah, it is. It's so really the golden rule applied in commercial real estate lending, where he who has the gold makes the rules, right? And the lenders had the gold and they made the rules. So, they would sort of say, well, let me fit you into the program that I have. What we've done, and it's actually the coolest thing, we've got a poster of the golden rule there, which we framed upside down in our offices, because we're turning the golden rule on its head. And the whole premise being that, money is fungible, whether the dollars come from bank A, bank B, bank C, or Fannie, really it's the same money, right?
Yes.
So really what we've done is empowered the borrower. And we've created a borrower-centric model. And I could say, I wish I could say it was total genius on our part. All I did was I looked at every other industry, and probably the granddaddy of them all is Amazon, who really redefined commercial, consumer goods and retail behavior. And not only did they give the borrower better, or the buyer better access to a huge range of different product, they redefined the fulfillment process. So if I would have told you 15 years ago that you would go online and ordered a product, and same day that product would be delivered to you, you'd say, like, Mitch, what are you smoking? I mean, it would have been unheard of, and now it's commonplace. So
it's changed not only the consumer habits and retail trends, like you said, it's also changed our daily life, because how many times do you hear somebody wants something and then they're like, oh, just look it up on Amazon. I mean, it's crazy. I was in a training class the other day for commercial real estate agents, and there was a book that we were talking about, and someone dropped the link from Amazon. And EXP, they say they're the Amazon of real estate. So this is a great analogy, because it sounds like you are wanting to become the Amazon of commercial real estate. I love, are you using that tag phrase in your promotional materials, about empowering the borrower? Because I love that.
Absolutely. The whole thing is empowering the borrower, providing better efficiencies and creating better value for the borrower. So our goal is not only to provide better access for the borrower by giving them, we currently have probably in excess of 500 lenders on our system. We're adding probably about 50 new lenders a month. And the real power of the platform is not only do we have the big national lenders like, the Chases and Wells and B of A's and, Cantor Fitzgerald, Goldman Sachs and all those guys, but we've got all the really active community banks and credit unions within a region. So for example, look at California. It's a massive state, right? So a community bank in Northern California is not going to lend in LA. So what we do is we go and see who are the active lenders by property type. So who's an active lender in multifamily in Northern California? And we ensure we have the top 20 community banks in that region for retail, industrial, office, et cetera, and then we'll go by region, and then we also want to have the top 10 credit unions. So by the time we have what we consider a state as our core market, we have every real player. We don't just add banks for the sake of, oh great, you're a bank and you're in California. Are you active?
Do you call them up and get a relationship with them and get them on board with your process?
Absolutely. We'll hand select the banks we want to work with. The banks love it, because I don't know if you're aware, there's a statistic, it's an MBA statistic, that more than 2/3 of all commercial real estate loans funded are originated by third parties. So the space that we're living in is dominated by smaller mom and pop mortgage brokers, which essentially send deals at varying levels of quality to these lenders. And so the lenders are used to getting their loans from somebody else. So we're not really looking to change the lender's behavior. We're really slotting into that space, which is really very, very inefficient. And the analogy that I always use is, for those of you who are probably a little gray like me and remember the olden days when we traveled, we'd go to a travel agent.
Yeah.
And that travel agent would book you on a particular airline or hotel. Was that the best for you? Probably not, but that's who they had relationships with. You know, they couldn't have relationships with every airline in the world and every hotel chain in the world. And then fast forward today, and you got Travelocity and Orbitz and Priceline, Expedia, yada yada yada. You've now got absolute access to every single hotel and every single airline in the world, essentially.
But let me ask you
Yes.
this, Mitch. You got so much good information. My brain is just going, whoa, I have all these questions.
Yeah.
For example, you brought up travel agent, because I travel is one of my big life goals, and I travel a lot. And so I actually use a travel agent for everything, because, and I think that they have better relationships now, just like you're talking about, other fields like in the lending. However, I love that personal touch. And so how do you balance with disrupting the commercial lending? How do you balance the personal relationship with the process?
Absolutely, great point. So as I said, your in my analogy, your mortgage broker today, your smaller mortgage broker, is the travel agent. We see ourselves as the Expedia or Travelocity of the commercial lending industry. The big difference is we recognize we're dealing with a very technical, high dollar product. So 90% of borrowers aren't going to go online, fill in an application for a $5 million transaction and hope documents arrive in the mail, via FedEx 6 weeks later. So we're combining the best of personal touch with technology. So on every transaction, we have a very seasoned originator who works with the borrower to counsel with them and truly understand their needs. What is it that's important to you? Once again, focusing and ensuring this is a borrower-centric platform. Is it interest rate? Is it payment? Is it prepayment? Is it loan to value? So we prioritize what is that borrower's hot buttons. Okay, interest rate's number one, then payment, then, because payment will tie into the amortization on the transaction. And then maybe prepayment penalty, et cetera. And then our technology looks at about 30 key sizing up variables that are used by any lender on a commercial transaction. Every lender will say, this is where I lend. So they got a lending footprint. This is whether it could be by city, by state, by county, whatever. Every lender's got a minimum, maximum loan size. Every lender's got a kind of property they'll lend on. And then you get into your algorithms like debt coverage ratio and global debt coverage ratio and debt yield, et cetera. And we will go ahead and obviously that's a mathematical calculation that's built into our technology. It could either be recourse, non-recourse. So we look at those 30 key sizing up variables. So we manage the database of lender information, which we have within our database, which is kept current using algorithms which ping the various indices.
Oh,
so the rates are kept current.
Yeah.
All the guidelines are kept current because the lenders have a portal that they update their data. And then we have a search engine which matches the borrower's needs with the best lenders. So really by using the technology and then that personal touch, it really just creates a phenomenal borrower experience.
So that was going to be my question, because, for example, the lenders in my area, the local lenders that I use, I touch base with them every few months just to see what's going on. Like, what are they looking to add to their portfolio? What's changed with rates or the process? And especially during the pandemic, one of the first things I did when we went into shelter in place was reached out to my lenders, because things are changing all the time. And so it's great to hear that these lenders have a portal that they can go in and update all their parameters, or whatever it is, because I can call a local bank and say, hey, I have somebody who wants to buy a 25 unit apartment complex, and they'll say, no, we're not adding those asset types to our portfolio at this time, for whatever reason.
Exactly. And think of it, you could have a particular bank who is the go-to bank for, say, multifamily. And you've been there, and they're great, they're aggressive, their pricing's great, but they might max out on their capital allowance for that particular property type, or the regulators come in and say, hey guys, we're not happy, you're too heavy in multifamily, we want you to stop. And they turn the faucet off like instantly. So like 6 months ago you went and you got a great deal with them, 6 months later you go back and they're gone. So you know, lenders come in and out of the market depending on their own internal needs and parameters. And the beauty of our system is we lend agnostic. We're going to find the borrower
that's a great
best
term.
it's,
Lender
it's
agnostic.
Exactly. That's one of our
Bless
taglines.
you. Bless you, Mitch.
Exactly. That's why I'm growing the beard, you know, starting to look a little pious there in my old age. But,
oh my gosh, that's so funny. So those parameters that you use, because I see, you know, these search parameters or the artificial intelligence that's doing the search parameters. I see this in some of the other tools that EXP Commercial offers, like Enriched Data and Cars, Reonomy. For example, Reonomy can tell you who's most likely to sell based on certain parameters. Cars and Enriched Data, and I know you partner with them, and I'd love to talk about that. They have 300 data points that they use for analyzing data for the value of properties and things like that. So what do you think about this trend of using these data points in order to make the process in commercial lending a better one for the consumer?
I think it's so long overdue. You know, I think once again, technology has redefined virtually every other aspect of our lives. Through various online platforms and search engines. And I mean, just look at Google. I mean, you know, before it was so difficult to get information. Now probably we can get more information than we want to get. You know, you just Google it.
We're over informationalized.
Exactly. But I think exactly. But I think, you know, with a commercial real estate transaction, as complex as it is, it's a high ticket item. It's almost immoral to a point where it was just old school. You know, there was like no technology, and people should make decisions based on data, based on accurate data, and there are a lot of data points within a commercial real estate transaction which using technology could be at a buyer and borrower's fingertips. And I think by, you know, using enriched data and these other various online platforms that are aggregating huge amounts of data and synthesizing it in a way that it becomes very meaningful for a potential buyer, I think is phenomenal. You know, and we could talk about it now, we could talk about it in a little while, but you know, we're working on an initiative through EXP, who we're you know, the preferred lender with commercial lender with EXP. Yes. That we're working with Enriched Data and Villa Title and some other, you know, preferred partners to create a one-stop experience for the commercial, both the seller and the borrower and the buyer, where it's literally a one-stop experience where they from literally the offering memorandum through to closing, all the different components just plug in, and all
the data is being collected along the way, right, through enriched data. So
absolutely,
that exponentially improves not only the process but also the information that you have, so that you can trend more quickly, wouldn't you say?
Yes. Oh, you know, and I think as you know, as more and more transactions occur, that data is going to become more and more relevant and accurate. And it's just very, very exciting. I think it's, you know, as I said, it's long overdue, and it really is going to redefine it.
Mitch, what's your take on why commercial real estate has been in the dark ages for so long? Because I talk about this and you know, we all know it, like EXP Commercial is being a disruptor in their lane as well. And we're blowing this thing wide open and putting commercial real estate out in front of people. And so what do you think that's all about?
You know, I think it was very much, you know, being that it was relatively large ticket items, it was that old boy network, and it just apathy. It just, you know, and it is complicated. I mean, there's no doubt that disrupting, particularly the finance part, which we've done, and I know what EXP's done on the brokerage side. It's not a simple process. I mean, when I embarked with CommLoan and said, this is what I want to do, everybody said it cannot be done. And I guess that's all I had to hear. And that
you're
was
like,
more,
bring it on.
exactly. It was more fuel for me to say, let's do this. Okay. That's a challenge.
That's what I love about your personality, because you've got over 30 years experience. And then you went through the commercial loan process at one point and you're like, heck no, this is not working. And so you're taking that, just that entrepreneurial spirit, which is, I want to take this thing apart and I want to fix it. And is that the way is your whole life like that? Or is it?
Pretty much. I say, and this goes without saying, any upheaval in my life is self-imposed. I can't blame anybody.
You can admit it.
Yeah, because it's like always like, okay, now this is working. How do I go find something else to, so it's, but it's exciting, where you can actually find a problem and solve it, and particularly a really difficult problem. And we have the initial design of the technology took about a year or so. So it was such fun for me. It was like the old proverbial startup where I'd sit in a little executive suite and I'd arrive in my sandals and shorts every morning, and I would design during the day. And then I've got a phenomenal development team. We got an office in India, just outside Delhi, and they would develop at night, because of the time difference, which was their day.
Time.
And there would be the cycle, and it was just so much fun. It really was. And it's a little terrifying because you're spending all this money, and you just don't have anything to show for it until you press that button the first time, and it's like, oh my God, it works.
How long did that? I mean, I know that process is ongoing with developers and everything. It's always getting bigger, better, or not necessarily bigger, but more streamlined and more effective in this nuanced, intricate process. But how long did that, big initial chunk take for you to get this process going?
It was almost a year. It was almost a year of constant developing and designing, to get, to build a database and the database structure. When you analyze it, if every time you change one variable on a loan, so for example, everything's the same, but instead of the borrower being a US citizen, they're now foreign national. And then the lender will change maybe the loan to value, maybe they'll change the interest rate. So the 500 lenders we got represent about 100,000 loan records, which is huge. So you could have one lender having, several thousand loan records, because each time you change one variable, it becomes a new record. So I think designing the efficiencies of the database, and then, in order to have the speed of your search engine, and then just, nobody had ever done this. So I literally sat with a blank piece of paper saying, well, what do you do? So it was a lot of fun. I think what was probably critical for me is that I did come from residential lending. I spent 25 years owning a residential mortgage bank. So I had a really good feel for, DU and LP and some of the basic principles in those very sophisticated underwriting engines. So I think that helped me, sort of as a guiding light, that I at least had the North Star to follow. But but it was, it was a lot of fun. And truly, it sounds like a cliche, but when you press that button for the first time and it actually worked, it truly was like a baby being born. It was like, oh my God, this thing works. It was very cool. Yeah.
So we have, as you know, we have a live audience today for CRE Power Hour, and you are unloading so much incredible information, Mitch. It's like crickets out there. I think everybody's just taking notes and absorbing it all. And so,
as long as they're not going to sleep, that's
we
a good thing.
We haven't heard any snoring yet.
Well, hopefully we don't.
You're doing a great job.
I'll have to try and speed it up a bit.
If you're tuning in, ask in the chat, ask some questions to Mitch, because we'll have him answer your personal questions live here on the show today. And so we're going to keep going. So let me ask you this. Abby says, great convo. And someone else says, we mentioned Reonomy. They said Reonomy's cool. They have better phone numbers. Yeah, because in Reonomy, you can get information for all of the owners.
Exactly.
Yeah, you can do that in enriched data as well. For commercial real estate agents that want to hop on board with your process, because you're in just about every state. Now I'm in Nevada, and I know you and I are talking about
Yes, we got to get that going.
Getting Nevada going, and you need a mortgage loan officer that's licensed here in the state of Nevada. So we're going to put that shout out there. If you know anybody that
let us know.
You go ahead and tell them what you need. You might as well use this commercial.
Yeah. So Nevada is one of the few states that is pretty stringent on their licensing requirements for commercial real estate, and we fit within the broker space because we're not funding the loan, we're in originating the loan and then passing it on to a lender. So they require a person with a a mortgage, a residential mortgage license, or a mortgage broker's license in the state of California to act as our responsible individual. And then obviously we need brick and mortar, which you and I have spoken about, which shouldn't be an issue. So probably that's one of the last states, just because of like, to deal with the regulation. So anybody knows anybody who would like to talk to us about that, obviously, they'll be compensated for their efforts and to help us get our licensing up and running there. But yeah, we will, that's definitely going to be a priority. We want to be up and running in Nevada. But other than that, we're as far as core states, and I explained what a core state was, I believe we're in Arizona, California, New Mexico, Texas, Florida, North Carolina, South Carolina, Georgia, Washington State, Oregon, Utah, and we're adding probably about one a month at the moment. As our team that brings lenders on is called the lender service team. So as the lender service team goes from state to state, bringing on these smaller community banks and credit unions, then it's a core market. Obviously, if it's an agency loan or a CMBS loan or a big national bank loan, we can do it nationally today. With the exception of Nevada because of the licensing, I guess.
We are an exception in so many arenas.
Yeah, Nevada, you guys are tough. I mean, my God. And we actually started in Nevada. I'll tell you a little side story. So we started, I had a guy set up, he was going to become our responsible individual. Life was good. And we actually originated 2 loans. There were 2 pretty big apartment buildings. I remember one was probably it was a $10 million loan. The other one was probably about a $15 million loan. And so we were like 3/4 way through on the loans. And then for whatever reason, it fell through with this guy, and he was no longer be our RI. And then the licensing fell through, but we still had to close the loans. I mean, we couldn't drop the borrower on their heads. And oh my God, we got slapped on the wrists by Nevada.
The mortgage lending division.
Yeah. So I just got out of jail a couple of days ago. So
you got your get out of jail free card.
Exactly. But yeah, so we got to get it back up and running. So
we dropped your contact information, Mitch, in the chat so that everybody can reach out to you and also connect with you on LinkedIn and call you for some commercial lending, or maybe hopefully even someone who's looking for an opportunity in Nevada. So let's say, because with EXP Commercial, CommLoan, your company is a preferred lender, and you're in front of all of us so that we know about you and we have the opportunity to work with you. So let's say there's someone who is outside of EXP Commercial, and they haven't seen the light and come to EXP Commercial yet, and they want to interface with you. So they reach out and they get connected with someone. And tell us, just kind of give us the overview of what the difference is, how the borrower experience is better through the loan process.
Yeah, so the process is really simple. I mean, the borrower would literally just go to CommLoan.com. Right on the front, the landing page, there's a get a quote, little button, hit the get a quote button. Fill in some basic contact information, name, email, phone number, and, basically what is, is this are you looking at a purchase, refi? hit submit. Generally within an hour or two, you're going to get a loan from a call from a live loan consultant, that seasoned loan originator, who will then counsel with the borrower and, understand what the borrower's needs are, prioritize those needs. And that loan consultant is the one who will actually run the system. And
those 30 those 30 data points you were talking about.
Correct. Those 30 or so key variables. And then normally, there could be 150 results, and then they will filter them with the borrower to come up with the top 6. At that point in time, the borrower will get an email with a link to a portal. The borrower sets up their portal with their password, and access is generally their email. And they can download the pre-qual in their portal. And from that point on, their portal becomes their go-to place. That's their point of contact, where they can download forms, upload all the documents that are needed, rent rolls and T12s and et cetera. And they will also get all their term sheets from the lenders through their portal. They track the status of their loan on their portal. So it really is that one place where they can manage that entire transaction.
Sorry, go ahead.
Yeah.
Okay,
you go first now.
Manages that portal, correct?
Yes, it's our portal. Yeah, so It's our portal that we manage.
And then when they upload all those documents and they have those 6 potential lenders, then they can interact and choose a lender through that portal?
Well, the lender won't even know that borrower exists until we actually package the loan. So the lender gets a phenomenal package from us,
awesome.
which has images of the property. It has all the major tombstones that the lender's looking for. It's got demographic information. We've run all the spreads, so we've calculated debt coverage ratios, etc. for the lender. The lenders love our platform because it makes their job so easy. For starters, the system has predefined that loan fits for that lender. It meets every criteria. It's the kind of property they want, it's the size they want, it's the location they want, it's everything fits. So they know right out the bat this is a loan that they want. We do control the transaction. So what we do is we have the borrower sign a 30-day exclusive, but within our exclusive agreement, we say the minute you get term sheets, if you don't like any of the term sheets that we provide, we release you. Okay. So the reality, normally it takes maybe 2 weeks to get term sheets back. It'll take a week for the borrower to get us their docs, and then a week for us to get term sheets from the lenders. So generally, we would release a borrower within 2 weeks of it. The reason we want an exclusive is twofold. The first reason is the lenders know we control the transaction, so they're going to put their best foot forward. They're going to really try and win the deal. So as a result, the borrower is going to get the best possible and the most favorable terms. The other reason is obviously we're going to be investing a lot of time and energy and manpower into the transaction. We want to make sure we have a committed borrower.
Well, I love that. I love this part that you're saying where the lender is going to put their best foot forward, because lenders can be a little bit laissez-faire sometimes and maybe not have the best, be a little naughty, not have the best service because they have stacks of, business on their desk. And so I like the fact this is part of, from my perspective as a broker, where that better experience for the lender comes in, because you're helping the lender stay in their lane and do a good job.
And the lenders are, don't have to do a lot of work on our deals. They really teed up just to go in front of a credit committee, but they know they're on the clock, because they know 5 other lenders are looking at this deal who also fit. So what it does is, like any competition, it drives down the price and it drives up the value for the borrower. I'll give you a real great example. We did a deal for a guy who very, very, very successful gentleman. He had just sold out of a tech company, so he loved tech. So he had a substantial amount of money. He had bought quite a bit of commercial real estate already. And he had his go-to bank that he had dealt with on several transactions. But his commercial real estate broker referred him to us, and he was intrigued by the technology, being that he was in the tech space previously. Sure. So he said, and his bank actually was on our platform. So he said, let's give it a go. let's try. And even if your bank's on, my bank's on, you guys handle the transaction. The long and the short of it is we drove his, so we took it out, and his bank was obviously in the lineup because they were aggressive on that kind of property. But another bank really wanted this deal as well. Because of the competition between these two banks bidding against each other, we drove down his bank rate. His bank had already quoted him by 50 basis points on a $5 million loan. That's money. I mean, that's significant.
That is very significant.
It's just comes down to competition, you know, and the banks know that if you don't get back within, you know, a few days, you're not going to get the deal. So it's a win for the banks because they're not investing a lot of time, you know, kissing a lot of frogs. But on the flip side, you know, it's phenomenal for the borrower because the borrower truly gets the best loan that fits their needs. So we're not trying to shoehorn a borrower into a product that really doesn't fit for them. It's empowering the borrower, and that's what really excites me about the platform.
So there's no frogs at CommLoan.
No frogs at CommLoan, only princes.
Prince Mitch Ginsberg.
Oh my
or maybe
God,
you're the king. Maybe you're the king of CommLoan.
I don't know, maybe I'm the cheap bottle washer. I don't know about the kings.
So
I'm not treated like a king.
We have a question from our live audience, Mitch. Yeah. The question is, so what is the process for us investors? When do we contact you once our LOI gets accepted? Question mark.
No, absolutely not. You can get to us ahead of time. You got the property, you know, you're probably working off an offering memorandum that you've seen that you on a property you like, or even if it's off market, maybe, you know, but you've at least got the basics, as you've been able to run your spreads to ensure that the deal makes sense for you. So, you know, you've got the NOI, you've got your rent rolls, you've got your rent makeup, depending on the type of the property. So you reach out to us ahead of time and let us be part of that buying decision. Because I think a key component is what financing can I get on this deal, and what kind of rate and what kind of terms and what kind of amortization. So what's my cash flow going to look like? What's, you know, my return on investment going to look like? So I would encourage any investor before actually, maybe even before putting in an LOI, to say, is this deal going to work for us? So in essence, we become your capital market. And, you know, I think all big investor groups have like a capital desk that they have. Allow us to become your capital desk, because I think with us, the difference between us and a mortgage broker, using the technology, it's easy for us. We could instantly run the numbers. You know, we've had borrowers that we've run several quotes for them on different properties until they find the right one. But at least when you're submitting your LOI, you know you've got a really good handle on what the financing options are going to be.
That's great that people can partner with you and use the tools that you have to determine if a deal is going to work for them, and you know they can throw it at you and your technology, and you can help them with that. So the live audience says, this is amazing, Mitch. I will definitely contact you. Oh, that's great, because you know we're really about creating relationships here and empowering people. So this is a direct example of CRE Power Hour and how it works. So let's switch gears a little bit. I want to ask you some questions. King Ginsberg.
Thank you.
We need to get you
I've never been called that before, so hopefully this is being recorded. So
so I don't mind. You can call me King.
I can play it for my family. At least I'll maybe get some respect, right?
I love this. King CommLoan. Tell the audience, the live audience today, what is the biggest lesson that you learned in 2021? You know, going through the pandemic and how so many things changed. What was your big takeaway from that?
You know, I think like any crisis, there's always an opportunity. And I think that's what we all got to realize. You know, instead of saying, oh my God, the sky's going to fall in and the world's just ending, you got to look, where's the upside of it? You know, it is what it is. There's going to be all these macroeconomic and political factors that are to a large extent out of our control, but how we react to them is in our control. For us, particularly the COVID, the pandemic, and I guess it all started in 20, the first two, like the second and third quarter was an absolute train wreck, because obviously everything shut down. So any deals we had in the pipeline, everybody just ran for the hills, just nothing
I
closed.
remember, unfortunately.
And nobody was obviously doing new deals. But then came Q4, and it actually was the most amazing thing how it worked to our advantage, because people all of a sudden were used to being online and not going into their bank. And maybe then they still even couldn't go into the bank because all the banking offices were closed. So everybody got used to working online. And for us, it was just like, it just skyrocketed, because that one resistance in behavior that people had was not sitting down with their favorite bank or whatever, and they're having that face-to-face coffee, and they couldn't do it anymore. And all the Zoom calls and everybody Zoom just became a normal way of doing things. So I think for us, that was a huge turning point. 21 was a phenomenal year. Our volumes went up probably close to 200% from 20. This year we're shooting that will probably be up in excess of 200% on 21. And I think it was literally part of the catalyst was, the pandemic, and just that shift in behavior of people being comfortable working remote and working online and transacting online.
I appreciate so much, Mitch, some of the points that you brought up, and our previous guests, some of them have brought up these same points, which is out of this very challenging global pandemic came some new opportunities for us to do things differently and to look at our life differently and to have gratitude and find the positive things that came out of it. And, we even developed a new vocabulary with things like, the pandemic and Zoom burnout. You mentioned Zoom, gosh, I still do a ton of Zoom meetings. And so I really appreciate the fact that you as a disruptor are also seeing that instead of being upset and depressed and sad, like some people still are about the pandemic, like all of the successful people out there, you really see the opportunity to expand our mind about the way that we can do things and what we can get done. And I really am so glad that you brought that up.
Absolutely. And I think, the other, the elephant in the room at the moment is obviously inflation, and oh my God, inflation and interest rates going up. And it's no secret they are going up, and they're going to continue to go up. So, most people say, oh my God, this is the end, with interest rates going up, commercial real estate is going to tank and crash. And I think to the contrary, I have spoken to a lot of very smart economists and obviously read, because we're investing a lot in this train keeping going. And I think there's some key fundamentals that are really different this go around. You've got an enormous amount of liquidity in the economy. Trillions of dollars have been pumped into this economy through COVID and through various stimulus packages, etc. So there's a lot of money, and that to some extent, all right, is fueling the inflation, is this excess demand. And then obviously we've got supply chain issues and stuff on the supply side, which is fueling it a bit. So, but what happens in inflation? People gravitate to fixed assets because that's a hedge against inflation. You don't want your money sitting in the bank, because it's going to be losing close to 8% every year if we're tracking at what our inflation rate is at the moment. So you want to put it in assets, and we all know what's going on with both residential and commercial real estate. It's going up. It's just skyrocketing at the moment. And that's likely to continue because of the liquidity. So you've got a scenario where there's a lot of money out there still. There's money that's got to go somewhere, and commercial real estate is a great place for it to go. So I'm very, very bullish over the next couple of years. And I just think it's a great place to be. It's a great place to be an agent from us, from a lender's perspective. We love it. I think even, with interest rates going up a little bit for us is another enormous help, because I think borrowers who still go to their traditional bank are going to get sticker shock. They're going to go and say, well, my God, what?
I'm an investor, and that's happening to me right now. I'm getting sticker shock, and because I'm used to these, these very low interest rates.
Exactly.
And so it is encouraging people to
shop, to say, What
Yes,
options are they? Go online,
exactly.
they Google interest rates, and boom, up come CommLoan. We do an enormous amount of online marketing, so we're probably pop up number one on a lot of search terms.
We've had a
And
few. We've had a few people here saying, we've dropped your contact information a couple of times. How do we get a hold of this guy? We want to talk to him. So expect some more phone calls, and you're
absolutely, I
going to
welcome
be
that.
busy. Now,
That's
this is
good.
a question that Stephanie and I like to ask. We ask to all of our guests because this is part of the unplugged portion of this, and that is,
Yes.
Mitch, King CommLoan, what is your secret sauce? What is it that makes you so successful?
God, I think getting up in the morning is a good start, right? No,
So,
I think what it is just tenacity. You know, I think when the going gets tough, I just dig in deeper. You know, I think what's critical though is to have a very clear vision. Have a clear
yes.
vision as to what is possible, what can be done, and then plow through the obstacles. You know, it's always good to do a little bit of self-evaluation along the way, and just, you know, maybe correct course a little bit. But I think it's just stick to your convictions, stick to it, stick to a plan, which is critical. You know, you got to have a very clear plan that you want to go with, and believe in yourself. You know, and don't pay attention to the naysayers. I mean,
Oh
no
my
matter
goodness.
what you're doing, there's it's going to be done, and the sky's going to fall in, and this is bad, and that's no good, and the economy, and this, and you know what? It's you know, we all make our own destiny, and you're either going to make a great one or not. And I think just be positive, be focused, and just make it happen.
You and I are in alignment on that, because I teach commercial real estate agents all across the US Monday through Friday at eXp Commercial. That's part of what I do, and I love doing that. And I talk to people about, if you don't know where you're going, you're not going to get there. So having that plan is so important. And then you mentioned something else that is so important, and that is making those shifts. And sometimes those micro shifts, these small adjustments, and knowing when to make them, when you're getting the feedback that I need to make a shift here, and doing that can be so powerful in moving you forward. And that tenacity that you have, that, has your family ever told you that you're stubborn?
Oh, totally. I mean, they gave me a little bulldog that I keep on my desk, and it is, because once I get my teeth into something, I just don't let it go. And it's and you know, that's the key is to stay with the vision. But then, you know, obviously doing what we've doing, nobody had ever done this before, so we didn't have a roadmap to follow. You know, that okay, this is the way we go. So there was a lot of trial and error along the way, and that's where the adjustment comes in. You try a little bit of this, and I think you got to take a step back and say, is this working? If not, why not? And then what's the corrective action?
Mm-hmm.
You don't lose sight of the overall goal. The overall goal is what it is, and you stick to that goal. But how you get there is going to take a lot of shifts and turns, and that's what takes tenacity, because you can get downhearted at times. You know, it's like, oh my God, you know,
I went down this path for a while,
you know what,
and now that's not working, and now I need to shift. And you made another good point, which is so important, to measure what's working, what's not working, and to take that step back and look at the big view. Because, you know, when you're bulldogging, you have to lift your head up and go, oh, wait a minute, there's a big picture here.
Exactly. You know, you got to work according to metrics, and you got to have clearly defined metrics for whatever you're doing. Yes. Whether it's you want to make a certain number of calls a day, you want to do a certain number of this a day, and those key metrics are going to ultimately get to your end goal. And then you got to evaluate those metrics. And am I hitting those metrics? Am I achieving the desired result from those metrics? So, you know, if you're saying your desired result is you're going to get in front of, you know, X number of sellers per week by making Y number of calls, but that metrics at some point over time doesn't correlate, and you're making all these calls and you're not getting in front of anybody, it's time out. You know, what do I need to do to get to my end result? And and that's where you adjust, but you got to give it time, and you got to stick with it to be able to give it enough time to evaluate truly, is this a good reading on the metrics. But everything should be numbers driven, where it's, because that's not ambiguous. It's not, you
can't hide
numbers
in the
are what
numbers,
they are.
right?
Exactly.
They are what they are.
Exactly.
And I coach and mentor commercial real estate agents all over the US as well. And I have an accountability sheet that they give them, and it's all based on money making activities and the numbers associated with them. So it's plain as day. You're either doing it or you're not doing it. So you're either investing in yourself and being your own best friend, or you're not investing in yourself. You're losing money and you're not investing in yourself. So that's the way I look at it. And the activities that people are doing today are creating their next quarter, their next 12 months, their future.
Absolutely.
If any of you are interested in reaching out to myself or Stephanie to talk about commercial real estate, to talk about EXP commercial, or to learn more about CRE Power Hour, our producer, Katie, the behind the scenes magical lady that you can't see, she put a link to my calendar there, and she can also drop in my contact information and Stephanie's as well. And so I have another question for you, Mitch. What's your recommendation to business owners, entrepreneurs, commercial real estate agents on how to grow their business in 2022 and beyond?
I think once again, you got to look at the overall economic situation, where it's going, and once again, in our particular space, commercial real estate, I think the prognosis is really positive. It's very good. So I think just do the activities that are going to drive your business, and once again, it's just reiterating, come up with your plan, set your goal, knowing that potentially we're going to have a very strong market still for the next couple of years, and it could go beyond that, and who knows. But it's so much, my crystal ball breaks after 2 years. I just can't see beyond that. But it's so just be aggressive and get your piece of the pie. Somebody's going to do it.
Get more than your fair share. That's always my saying. And we have a question in here from our live audience from Rebecca. She says, Mitch, who are your mentors? Who has inspired you in life to keep your focus on success? That's a great question. Thanks, Rebecca.
Wow. There's so many. I think for me personally, I get something out of every human interaction, and I learn something from a lot of people that I interact with. I think from a pure business point of view, somebody that inspired me many years ago, I think just conceptually of redefining an industry, was Bezos back in the day. I watched a podcast of his back in the 90s, when Amazon was just a nothing basically, and he said that technology is great, but it all comes down to the customer experience, and that stuck in my mind like unbelievably. And technology is wonderful, but technology for the sake of technology is worth nothing. It all comes down to redefining that customer, in our case, borrower experience, and really creating a superior experience. And it's not only giving better access, but redefining the entire experience. So I think he's been very inspirational. A lot of athletes have inspired me, and I think that shows the tenacity, and even people like Michael Jordan, who I think is probably the greatest basketball player of all time. Even as talented as he was physically, he put in so much work. He worked so hard to achieve his excellence. So, and he really would have still been a really great basketball player even without the extra effort. But to him, it was, all or nothing. And I think, that kind of tenacity from a lot of these top athletes, where they work so hard, you just see them at the pinnacle of their career, and
they make it look easy at that point.
And they do. It's effortless. It's, I'll never forget watching an NBA finals between the Suns, which at the time I was living in Phoenix, and Charles Barkley was on the team, and Michael Jordan, and it was the finals, and watching Michael Jordan play, and it looked like a pickup game for him. I mean, it was effortless. Yeah. And by making it look effortless took so much work to get to that level. And I think that's it, so it's just looking at people that overcome, and then you have people that have enormous hardships and are born with so many negatives and so many challenges that they got to overcome, and still embrace life and fight through it. So I think in my personal life as well as in business, it's just count your blessings for everything we have, and put in the effort, yes. Have a plan, and it's amazing. The harder you work, the luckier you get, right?
Well, the gratitude piece is so important. And then, continuing to move forward to get to that level of excellence where we were talking about the athletes who make it look so easy. And what I find in my experience, so I'm in my 17th year in real estate, is that most people quit right before they get there. That it's like you can be so close to the finish line, and your success is so close. It's those few millimeters away, or there's few months away, and people get disenchanted and they stop.
Yeah, and I think also just don't be complacent with the status quo. And I think those agents that aren't part of EXP should seriously look at EXP for the simple reason, as far as the disruptor aspect of it, that why keep doing the same thing over and over if there's a better way of doing it? Yeah. And if you can get better tools and better, so have an open mind, go look at stuff, evaluate it, and then absolutely make your own decision, but always have an open mind to doing something better, or having a better way to do things. And I think that's really critical.
It is so important. And thank you for saying that. And Stephanie and I, when we talk to people about EXP commercial, because we are disruptors, we say, you can say no to us, but give this business, this unique business plan, an opportunity to just look at it, because it is very different, and it's very focused on the agent and their experience and getting more money in their pocket, and then they can go out and help the consumer with partnerships like we have with CommLoan. So Mitch, oh my gosh, I enjoyed our conversation.
Likewise,
so much today. Thank you so much for being here. And we've put your contact information in the chat a couple of times, so I'm sure that you'll be making some new connections. And CRE Power Hour, we are a live show, and we are also a podcast. You can find us on Spotify, and we have our show the second and fourth Wednesday of every month at 11 a.m. Pacific Standard Time. And in 2 weeks, our guest will be Heidi Hawk. She specializes in land development, commercial land development across the United States. And so we'll talk about trends in land development. Mitch Ginsberg, the king of CommLoan, thank you again. I can't wait to see you hopefully soon at Shareholders Summit. Are you going to be there?
Absolutely. I'll be there.
Okay. Thanks so much. Have a great day, everybody.
Thanks. Take care, guys. Thank you. Bye-bye.